Hi, and welcome to another video at Street Smart Options. Folks, tonight we're going to be talking about a stock that I'm sure everyone here has heard about, but at the same time, think about it like this. When you're looking at your trading, especially you're looking at your training that you're doing or anything that you're doing to broaden your perspective about how to make money on the stock market, especially with trading with options. If you don't have 30 years worth of experience like my business partner, if you don't have the type of expertise that Jonathan brings to his trading and to the research that he does, you really should have someone helping you, someone there to be there to give you a hand should you run into problems. And that's one of the things we do over at streetsmartoptions.com. That is our website. That's where we have our training program. That's where we have our community of traders just like you. Because if you get yourself in, especially if you get yourself a little over little over your head in the water, and you start to have some issues, you need to have someone that you can ask questions of, someone that can, really kind of hold your hand and help you out. And that's one of the things we do there. Now, obviously, you can join our free group, and we'd be happy to have you there on Facebook.com/groups/Street Smart Options. And we'd love for you to subscribe on our YouTube channel if you're listening to us there. But we can only do so much through the YouTube channel. So just like if you went out and bought a franchise, you would have someone to help you with that business. We take trading very seriously. It's a business for us, and we'd love for you to be taking it that seriously that you signed up with us and had us as one of your mentors so that we can help you out and really point you in the right direction so you're not making bad decisions. Having said that, Jonathan talked about Amazon back in February of 2018. We're going to talk about what he saw February 13th and what has happened since then, what would have happened had you got in on the trade, and what you should be looking at, because Amazon's one of those that a lot of people go to when they want to make a little bit of money, and Jonathan's going to discuss that now.
Hey, Jim, thanks. So Amazon, everybody's familiar with. They're an e-commerce Goliath. They make money from sales of products in the consumer business area online. And they also offer web services, and they sell those services as well. They're so big and they're such a dominant player. They've pushed Walmart to the side, or they're pushing Walmart to the side, especially online. They are the number one player online. And they started out as a little bookseller back in the early 90s. And they've, under Jeff Bezos, they've just become this monster online company. And their business model is quite extraordinary. You sell products, if you're a vendor on Amazon, right? You sell your products on Amazon on this open marketplace, and then Amazon just gets a percentage, right? All they do for you is they promote your products in their marketplace. They will warehouse your products and also fulfill your products for you if you're a fulfillment by Amazon vendor. So, and they just sit back and they collect a commission, a 15% commission plus fees. And the business model, Jeff Bezos realized early on that the internet is the perfect marketplace. And in the perfect marketplace, how do you compete as an online vendor if everybody's competing on price and quality? And how do you, if everybody's eking out these small margins because it's a perfect marketplace, how do you make money? Well, you make money if you are the marketplace. You just make a commission, a percentage of everybody. And so that way you don't have to worry about what you're charging customers. It's your vendors have to worry about that. There's a lot of competition on Amazon now. It's getting harder and harder for the individual vendors to make money on Amazon, but Amazon doesn't care. They make a percentage, and they are going to be the place people go because they offer the fast delivery and the variety of products, a deep variety of products. And by now, it's a name that everybody trusts. And I think they have a 40% share of all online sales. It's like some astronomical number. But all that said and done, they actually were running a negative earnings report for years and years and years. And a lot of analysts would come out and say, this company, how could you own this company? They're not making any money. They're overpriced, yada, yada, yada. And the stock price kept on going up and up and up because smart investors knew that eventually this company was going to turn the corner, that they were just taking market share from all the other players out there online. And they became, the dominant player. And then they turned the corner back, I think it was 3 years ago, if we look at the financials for Amazon on yahoo.com, we can, let's see, they turned profitable in 2015. Here's the net income from continuing operations. I mean, it's a monster company. They're doing 177 billion in sales in 2017, and look at this growth rate. They went from 135 billion to 177 billion. How many companies do you know can have that growth rate with that kind of revenue number, right? Nobody, just Amazon, right? So they are a one-of-a-kind company, and as such, you know, they're an institutional darling now. They're making money. They're a growth monster, and the stock just has a, you know, continues to go up and up and up. So it's easy to make money from a stock that goes up and up and up, right? Every quarter the stock is higher. So there's two ways to play this kind of company in this kind of stock in with options in a bull market, right? Because when the market turns down, I mean, the stock will go down with the rest of them, right? But in a bull market, you know, all you have to do is you either own deep in the money call options on this thing, and you know, turn your call options every, you know, 3 months, every 4 or 5 months, something like that. Or in the other way is to do, you know, bull call spreads, and you can do it on a regular basis. You know, every few months between earnings reports. You really don't want to hang it. You don't want to do it over earnings reports. There's always risk over earnings reports, even if it's Amazon. You never know how investors are going to take the latest earnings report. But so we try to avoid. Now, Amazon hasn't really been a problem through earnings reports, but just out of abundance of safety, we try to avoid the earnings reports. So we can, but benefit is the earnings reports come out every 3 months, right? So you can get in and out of these trades, these high percentage, high probability trades, every 3 months, and it's like a little, you know, a paycheck. So looking at the latest trade that we did on Amazon, this was a bull call spread that we initiated on February 13th, right? It was the 1160 call that we purchased, and we sold a 1260 call. And the numbers, I don't know if you can see the fine print down here, but I'll just go to the calculator in StreetSmart Options and take a look at what the numbers look like. We had a high strike that was a 1260. The low strike was 1160. It had an expiration that was about 45 days out. Sorry, take that back. It was 2 months out. So it was February 13th to April 20th. It was a 2-month trade, a little over 2 months. And the midpoint of the high strike option was 184 or 185. And the midpoint of the low strike option, the bid-ask spread, was about 270.8, 271. And so if you were able to hit the midpoint on entering the trade, which is the, you know, the goal, you can't always hit it, you know, exactly, but if you can, you know, that's your target, right? So your target is hit the midpoint of those bid-ask spreads, or the midpoint of the premium you're paying. You could have an annualized gain on this thing of about 90%, right? So if you did this trade every 3 months, you know, at the end of the year, you'd have maybe a 90% gain on your risk invested. So in this case, the risk is what your maximum loss is. It's the premium you pay, the initial outlay. And so the risk on a $100,000 portfolio would have been about $8,600. That's your max loss if the trade doesn't work out. And then your max gain is $1,410. That's 16% in 2 months, which works out to be about 90% over the course of a year. And like I said, you do this trade over and over again, and it's like a paycheck on a stock like this that just goes up and up and up in a bull market. Now, eventually, you know, Amazon, like anything, is going to run out of space on the upside, and it'll forecast that. It won't be. It'll probably happen over an earnings report, which is why we avoid earnings reports. It's not going to happen before an earnings report, very unlikely, unless there's this tremendous market break or something like that. Now, Amazon is unique, and it's one of those stocks that you can just, you know, trade over and over again, the same trade. If you look back at Amazon over a longer time frame, and say, let's look at the like the 20-year chart, right? Because this has been a huge winner. It's been going up since the tech market break of 2001, 2002. So if we update this, it's going to be a little squishy because of the it's a weekly chart, so it's going to be pretty squiggly. But you can see that since the 2001 market break, on a split adjusted basis, it was $5, $5.50 a share, and it's gone up and up and up. Now, there were some other breaks, right? With the rest of the market, it fell in 2009, 2008, right, with the real estate crash. But look at that. I mean, since the bottom of 2009, you could have pretty much traded this every single quarter. Every time it pulled back or broke the 10-week moving average, it found support at the 40-week, right? This is the red line, is the 40-week. So it would, just keep on finding support, and recently, of course, since 2015, it's just been on this upward trajectory, right? So an easy trade, easy to do, and just really easy to make money from, and controlling your risk. You're not taking outlandish risk on this thing, especially if you're doing bull call spreads. Your risk on this thing is a max loss of $8,600 on a $100,000 portfolio, and the actual risk of loss in any particular trade is extremely low. So it's just one of those things. Just like a little income that you can get just from the stock that goes up and up and up. So hard to find a stock that does this every month, right? But Amazon is one of those rare birds that is just easy to trade this way.
Fantastic, Jonathan. Thanks for explaining that to us. So again, folks, if you value what you're getting here, we really appreciate it if you would go ahead and make that subscription on YouTube. We'd love for you to check us out on our website. Send any questions that you have to us here on our YouTube channel. Post those, and we'll try to help you as much as we possibly can. But again, we can only do so much for free. We appreciate your patronage, and have a great day.